Good morning, Paul Georgie from Allendale. It's August 6th, Thursday morning. Covering for Steve today as he's out working with Orion and Max on their weekly This Week in Agribusiness show. Grain markets this morning, pretty quiet. The news that we've got so far that will be adjusted and looked at closer today is these weekly export sales numbers. The bit of a surprise on old crop. Corn, for instance, was a negative sales number. Trade was looking for much better than that. In soybeans, 444,000 tons of negative sales. So that means we sold less than we had cancellations on. New crop sales were above the trade expectations, so a little bit supportive there. Wheat also above the trade expectations. Other news, we've got the Asian markets that affect our markets here overnight. They were up, and up strong in soybeans compared to where we have been here in the U.S. So that's improving and increasing the possibilities there that we may get some further sales. However, that move of purchasing probably is going to go to South America, as we've seen the Brazilian real drop yesterday. We've also in Argentina, farmers are selling a little bit there, but most are hanging on in Argentina because of the presidential election. The hope is that they can get a new president there that's going to be more favorable to agriculture. The first round of that election will be coming this weekend. So trade will be watching that closely, and so will agricultural producers in Argentina. The big news that everybody's talking about here that's definitely taken the spotlight is the production numbers that continue to roll out. Bloomberg kicked out some early numbers here. They've got an average yield for corn at 164.7 and a total production of 13,332 for corn, which is going to be about 198 million bushel less than what USDA had last month. Soybeans, total production there is 3,742, 3,742,000,000 bushel. That's 141 million bushel less than what the USDA had last month, with a 44.8 soybean yield. The key takeaway from their average numbers is that the trade's looking for about 900,000 acres less soybeans than USDA had last month. So those are going to continue to be talked about as we go forward into next week when we have the USDA report. The Chinese continue to buy DDGs. That was out yesterday, but we had record exports of DDGs during the month of June, which is giving some support to corn. Ethanol production as well. We continue to see ethanol production running at a very high pace. Weather is a factor here. With yesterday, we've seen a lot of the models moving the rain to the south, which has happened here overnight. The southern part of Illinois, Indiana, over into Ohio is getting some rain. There's another system, however, moving in from the northwest that could give us some rain across the northern part of the Corn Belt. So still a lot of the Midwest will get some rain, and the key is that temperatures will be not real hot. So that should be positive for the crop. The big factor that the macro markets are looking at is this payroll unemployment numbers that'll be coming out tomorrow morning. They're very quiet here today. In the livestock trade, a few newsworthy stories there. Chinese government is continuing to crack down on environmental policy, and that's causing some further liquidation of these hog herds, and we've seen some sharp decline in pork numbers and hog numbers in China over the last several months. That seems to be continuing, even though hog prices in China are going up because of this forced liquidation, either moving to a different location or getting out of the hog industry completely. So that's definitely impacting feed demand and meat demand there. Here in the U.S., smaller show list, talk of a bottom in cattle prices and packer margins that are in the black right now are suggesting that we could see cash cattle prices trade higher this week. Most were looking for a steady go, but the way the packers shown some aggressive bids here, we think that we could get higher trade and possibly a 150 trade in the South by the time this week is over. Hog markets, the decline in weights, positive packer margins, discount of the futures, October futures to the cash index is all providing some support, and expect that to continue here today. Cutout values, beef was up 173 on the choice yesterday, select up 66, and pork was up 55. So we are seeing some strength in the product, which could be because of retailers preparing for their Labor Day featuring already. So expect to see some good support in the cattle trade and hog trade on weakness as we go into the weekend. If you got any questions, don't hesitate to give us a call. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.